Risk markets recovered mildly in the Asian session today and triggered some retreats in dollar and yen. Hope on additional stimulus from China was the main driver in stocks. A newspaper, Economic Information Daily, says China is planning to invest $2.3 trillion in the railroad infrastructure through 2015. But the upside is capped so far on worries on global growth as the IMF lowered world GDP projections. In the currency markets, the current development still suggests that most pairs are in consolidation and favor another round of recovery in the dollar and yen before their respective downtrends finally resumes. The IMF lowered estimates of global GDP to 3.3% for this year and 3.6% for 2013, compared to prior projections of 3.5% in 2012 and 3.9% in 2013, made in July. The IMF also stated there's a 1 in 6 chance of growth to fall below 2%. Chance of recession in 2013 is high as the IMF said the US would have a 15% chance, the Eurozone a 80% chance and Japan a 25% chance. The IMF said that global recovery has suffered new setbacks, and uncertainty weighs heavily on the outlook. Downside risks have increased and are considerable. And the answer depends on whether European and the United States policymakers can deal proactively with their major short-term economic challenges. Growth projection for China was also lowered to 7.8% in 2012 and 8.2% in 2013. In another report, the IMF stated in its Fiscal Monitor report that fiscal shortfalls in advanced economies would fall to an average of 5.9% of GDP in 2012 and 4.9% in 2013, from 6.6% last year. While the figures were revised modestly higher from July's estimates of 5.8% and 4.7% respectively, the trend of narrowing deficits is positive news for the market. According to the World Lender, most countries have made significant headway in rolling back fiscal deficits, and the improvement in fiscal balances is most pronounced in advanced economies, where the fiscal shock was larger, followed by emerging market economies and to a lesser extent by low-income countries. In Europe, yesterday marked the kickstart of the European Stability Mechanism, which has a lending capacity of about €500 billion. Eurogroup President Jean-Claude Juncker stated that the start of the ESM marks a historic milestone in shaping the future of the European Monetary Union. The euro area now is equipped with a permanent and effective firewall, which of course is a crucial component in our strategy to ensure financial stability in the eurozone. Yet, investors were still not comforted by the additional firewall as evidenced by the decline in the euro and rises in peripheral yields. Indeed, the market remained concerned about Spain as the debt-ridden country continued to refuse requesting external funding. Regarding this, Juncker said he is satisfied with the fiscal consolidation measures taken so far by the Spanish government. It is not up to me nor to us as members of the Eurogroup to advise the Spanish government to make a request. German Finance Minister Wolfgang Schäuble also said that the Spanish don't need an assistance program. That is what the government says over and over again, and we should just trust the Spanish government. While not applying for a bailout, the Spanish government announced that it would seek a €4.86 billion of private placement of 3- to 5-year bonds for financing needs. On the data front, Australian NAB business confidence improved to 0 in September. UK BRC sales monitor rose 1.5% year-on-year in September, while RICS house price balance improved to -15. UK data will be the main feature today, with industrial and manufacturing production, visual trade balance and the NIESR GDP estimate. Also, Canada will release housing stats.